G'day folks, welcome back to Pete's Investing. It's the 22nd of June 2024. You can see here natural gas and the ETFs for BOIL, UNG have all dropped slightly since our last update, and KOLD has advanced slightly. Here's our heat map, and at the top right you can see on the monthly we're still predominantly neutral with the exception of natural gas, and bullish on the weekly predominantly, and a bit of a mixed bag on the daily timeframes, and they're all based on the CCI 150 trend indicator, and I'll go through those as well for each chart, and plus the other instruments you can see here for your reference should you wish to trade those separately. Now on the trading strategy we use, we do trade on the high, based on the trend of the higher time frame. So if you're trading on the daily, for example, we trade in the direction of the weekly, or if you're trading on the intraday, we trade in the direction of the daily. We enter the trade when the CCI 150 has a fresh breakout from the moving averages, and I'll go through the examples for each chart. And we close a trade when the CCI 150 or the price breaks back into the moving averages. And again, I'll go through those examples. So first, looking at natural gas, we'll look at the trends on the monthly, weekly, and the daily. So you got here on the monthly, you can see there's a little fresh breakout of the CCI above the moving averages, and that's a big positive. You can see there most of last year is bearish and neutral during that period. So that's a big positive, the first breakout this month of natural gas on the monthly time frame. On the weekly, it's also been bullish for a number of weeks now, and on the daily it's just a fresh breakout to the downside. So just be careful about going long. I'd like to see this break above the moving averages in line with what the weekly and the monthly are doing, to be more positive about going long on natural gas. But in theory, if you're trading this on a daily time frame, as I said, you would have taken an entry when that broke above on the moving averages on the 22nd of April, that week there. That coincided with this period back here, so you would have been wise to take a long trade during that period, and that would have done quite nicely, and you would have closed out that trade when the CCI broke into that moving average band. So you would have closed it out on that red candle there, and then wait again and go on long again there. You can see it broke above on the moving average to the price chart, and again closed it out on that red candle. So you would have gained a nice little profit on those two trades. At the moment, I would not be going short until we see the weekly also break down below the moving averages. So at the moment, hold off until we see either the weekly breakdown and continue and confirm this bearish trend, or wait for the daily to break above in alignment with the weekly trend. Now if we're going to the smaller time frames, again I've got here the daily chart as a reference, and I'm showing you here the 1 hour chart if you want to trade the intraday, and I'm using the 1 hour as an example, but you can apply this to the 2 hour or the 15 minute or any other intraday time frame. So again, going short only on the smaller time frame based on the daily, you would go short. You can see there from that period, you would have avoided going short during this period. Obviously the price is broken above and the CCI broken above the moving averages, and you would have had maybe a little small break even or a small loss in that little break to the downside. Enter again there. That would have been another little trade you could have taken and closed it out down on that little candle there once the price or the CCI broke into the moving averages. Probably a false break there, then it started moving to the upside. Now in terms of divergence, you can see there there's no divergence on the daily. We did have a couple of divergence here on the CCI lower highs there, those two peaks there versus higher highs there. That broke down, hit our target there. Let me just zoom in a bit. You can see there broke down at first divergence, broke down, hit the target, and that would have been a Fibonacci range. If I drew the Fibonacci range between that point and that point, you can see there between the 23 and the 38% level, that's always a minimum target range we choose. Again, I don't trade this. The way I use the divergence is if I'm going long during this period, say, and I see a divergence like this starting to develop, then I'd start taking my profits off the table and pocket any profits I've made. There was a secondary divergence here versus higher highs there, and again you can see there it's fallen back, and if I just redraw that Fibonacci from that low to that high, that was a 23-38% level. That was our target range. The CCI kept dropping off, the price started falling after hitting this resistance, and that was the first touch point. That tail of that candle recovered a bit, then it fell further and actually went well below the 50% level. That's where we are today. So that would have been another retrace in terms of respecting these divergence. Next we'll look at BOIL. I know some of you guys trade this. We've got no CCI showing up on the monthly, but we can assume that's a bearish outlook. On the weekly, we do have a bullish divergence, and it's been that way for most of 2023 and this year so far. And it's starting to bounce slightly, but nothing too aggressive. And on the daily, we did have another bullish divergence here, higher lows versus lower lows on the price. Bounced off this support at 12.28. It's threatening to touch this second, or this resistance line a second time at the 24.69 level, but it's actually making it further downside. So at the moment on the daily, it's a bearish outlook with the CCI falling below the moving averages. Going to the 1 hour chart, again that bullish divergence has played out, hit the target at this point there, but notice the CCI is still sort of rising, but at the moment it's actually below the moving averages, meaning we only start taking short trades. So on the hourly here, the CCI is below the moving averages, so is the price, so you only take short trades from here. Now just notice as well, we don't have any divergence here to be concerned about. Back here we had a bearish divergence that fell off, and that would have been, that's not drawn there properly, that would have been the 23.38% level. That was between that range. So you can see there it fell off, hit a target. Now at the moment we've got another, do we have a divergence here? No divergence to talk of. There's almost a double top there. Sometimes these double tops can be considered as bearish divergence versus higher highs on the price. Normally we want to see the price moving, or the CCI move in conjunction with the price. So whenever you get this sort of hesitancy to make higher highs like it did on the price, we consider that as a double top, and in this case it fell off again, and that also hit the target area of the 23.38% level in that range there. In this case, it's fallen off as far as the 61% level. But again, only trading in the direction of the high time frames. We only take short trades at the moment. Next, we look at KOLD. Now, this is on the monthly. There's no CCI showing up, or it's starting to draw there. But I would say at the very least it's neutral. On the weekly, we had a bullish divergence here versus lower lows on the price. It has bounced, and it's still in a bit of an uptrend, although it's actually broken below the moving averages on both the CCI and the price chart. And on the daily, that's also a bearish momentum at the moment, although it's neutral. It's broken in that moving average range, so avoid going long or short. And that was after we had this bearish divergence, lower highs versus higher highs on the price, hit our target area. It's actually fallen below those 61% and bouncing off this 36.35 support area. Going to the hourly chart, and again using the daily as a reference, we only take, at the moment it's neutral, so we only prepare for long or short trades based on the daily, so don't take any trades at this point. But again, using the divergence as an exercise, you can see there's pretty much a double bottom there versus lower lows on the price, and it's bounced, hit the target area, and it's making new highs. So again, avoid taking any trades on this one until we see more confirmed movement on the daily if you're trading on the intraday. For UNG on the monthly, it's broken up into that moving average range, giving us a neutral signal. On the weekly, we did have a bullish divergence, and it's actually versus lower lows on the price, and it's actually made a bit of a bounce, nothing too dramatic. And on the daily as well, we had a bullish divergence versus lower lows, and it's bounced from there and hit our target area measured by that rectangle, and that was the 23.38% of the Fibonacci range, between that range there. Going to the hourly chart, again using the daily as a reference, this is actually broken to the downside, a fresh breakout on the daily, so we only take short trades. So from here on end, so long as the CCI keeps falling on the below the moving averages, we take short trades only. So that's bearish at the moment on the hourly as well, after hitting this bearish divergence versus high highs on the price. So if you got value out of the video, hit that like and subscribe button, hit that notification bell. Feel free to make any recommendations for us to review any further instruments or shares, and we'll get back to you in a future video. Thanks for watching, and see you in the next video.